All right, Patrick, let's dig into more interest rate conversation. I think it's fascinating for me. It's a I have an interesting perspective on this because I was hoping for a quarter point. You thought we weren't going to see it. You didn't think we'd actually see an interest rate drop for the rest of the year. I believe was your uh, rough
So
prediction. I
late, so
believe
late. If we were, it would
late.
be
Yeah,
late. Yeah.
I'm glad it came now. Now, that day when it happened, I happened to have a meeting with a mortgage broker I do business with. Been doing business with this gentleman for many, many years. He's a very significant real estate investor here in Peterborough and around the region. And I was curious on his take. So I said to him, I said, listen, I'm interested, Dave. I'm very fascinated by this. I'm happy this is happening. And I think this is like we're finally moving into the right area. He had this perspective, which I thought was fascinating. He said, I actually wish they wouldn't have decreased the interest rate. I wish they would have held on a little longer. And so of course I got curious. I said, well, what do you mean? Like that's an interesting perspective, but what do you mean? Why would you want that? I mean, this guy's he doesn't just sell mortgages. This guy's a big real estate investor himself. I mean, this is really impacting him. And just like it's impacting the rest of us. He said the reason is because the pain was almost at the peak. Like the pain was getting there and there was pain in the market, but we didn't see enough pain yet. And I was just starting to see the banks, finally, the lenders out there starting to get creative because the pain was starting to impact them. And when the pain impacts them, they get creative. And he showed me some emails from some various lenders that were doing very special programs. Like, for example, he had one particular lender willing to give 80% loan to value. We haven't seen 80% loan to value in years and years and years and years. They were only giving investors 75%, if not 70%. This lender was going to 80% LTV and was giving people a 100% market rents. They were equating those 100% of the rents to the person's income. Those are two big things, Patrick, that this lender was doing in order to make deals pencil, in order to make deals work. And he said, if we could have held on a little longer, where the pain could have got a bit worse, they all would have came in with these kinds of special programs, and that would have helped more than a quarter point drop. That's a fascinating perspective, Patrick.
Well, I've got a couple of questions that. So, first, I don't think this is going to do enough and is going to have a big, I don't think it's going to move the needle all that much. But interesting that he talks about 100% rental offset. And is that for investors or is that for first-time home buyers that they'll do that? Because of course, that we've got the initiative around the self-funding house, and
yes,
2 or 3 of the majors have stepped up and said, if you're buying your first time and you've got an additional suite, an ADU, then guess what? We are prepared to give you 100% rental offset. That's on a home buyer. But you're suggesting, and he's suggesting, that is sometimes the case for investors as well.
100%.
Interesting.
In this case, now that it's obviously pretty exciting to see that, for just for this particular lender. But his thought was they're all going to start doing this. If the pain gets bad enough, they're all going to start doing this. And Patrick, we've seen this. These are the kinds of things lenders used to do in 2015, 2016, before all the belt tightening, so to speak, started. We used to see these programs. They all went away. And we're on the precipice of maybe some of them coming back. That's exciting.
It is exciting, but I want to just emphasize something here, JG. You happen to be talking to a broker. You're working it every day. I mean, you are in the business of building and construction and investing and property management, all the things you do. It's what you do. It's your business. So you're having a conversation. This, to me, is a signal and a good reason for any investor who's even considering getting out there and going hunting for those opportunities, because they're there. Sit down with one of Rain's trusted partners, with a mortgage broker, investor focused, and start to have these conversations so that when you go out looking for opportunities, because they are there, you know in advance what's going on. I think this is just a great kind of example of what's going on that the general public doesn't know yet because it's not really out there. This is kind of like an insider scoop. Good scoop, JG.
It's a good scoop for sure. Yeah, no, I'm really pumped, and I hope that I hope actually both things happen at the same time. I think that's probably too much to ask for, but that's what I do is I ask for too much usually. So, I'd love to see interest rates starts to come down and these creative programs start to ramp up so that it really
Mhm.
gives people a lot of choice because everyone is feeling incredibly handcuffed. So, that was an interesting perspective from this particular mortgage broker. But Patrick, what do you think? Let's kind of break down the market and talk about interest rates and how they impact the different parts of the market. What are your thoughts on, and I think we should start with the biggest one. Of course, we could talk about buyers, we could talk about sellers, we could talk about, the housing supply. We will talk about all that. But what do you think this quarter point drop is going to do to the economy? What do you think is going to do to the GDP? Does this have a meaningful impact, or is this a big nothing burger, or is it something in the
I,
middle?
Well, I think, I don't want to call it a nothing burger, but it's not going to have a huge impact on the economy. Here's what's really going on and behind the scenes. And we have to so even look at your enthusiasm with a quarter point drop, right? And that is really a indication of market sentiment overall. So people will be hopeful. It'll start to shift the market sentiment, which is the attitude. I don't think it's going to change consumer confidence. I think people are still freaked out at the end of the day about the debt service ratios that are going to, if they don't change it more, in other words, people are already holding back. People are spending less and less and less. Credit card debt is going up. The economy, we have not felt the effects of these rate cuts or these rate increases yet. The lag is just coming through. My point is this: is there some hope now, and will it start to shift the sentiment a little bit? 100%. And we saw that even with the number of sellers going, okay, let's do this. Well, okay, that's a shift that's emotional, right? But then we don't realize, or many don't realize, the lag is still yet to come through the economy. And so will it shift the needle or move the needle much? I don't think so, not economically. I can't make it make sense, but you never know. Sentiment can drive a lot of things, and we'll see what happens over the next, probably 8 weeks.
Well, and I think that's a great point, Patrick. Sentiment is a huge deal, definitely for many parts of the market. But that lag that you're talking about, you said, let's see what it does in 8 weeks. That's what the Bank of Canada is thinking too, by the way.
Mm.
But you and I both know that from a macroeconomic perspective, in order for it to impact the real estate market, it takes up to 18 months for it to flow through the entire economy and actually impact the real estate market. And if you look at this chart here, that is, and you've been saying this, for 18 months now, if you look at Q1 of 2022, that's when they started, raising interest rates. That's the bar where GDP was at 5% for that quarter. It was the highest quarter. Forget that bar in 2021. That was COVID numbers. That doesn't really count. But that, post-COVID, Q1 2022 was the height of the GDP performance. They started tightening, and then look at the GDP since then, just down and down and down and down and down. And I mean, you have to squint to look at that, the latest bar in 2024. You have to squint to see it above zero. So we're essentially now just about to enter that negative GDP road. They know that. That's why they're cutting interest rates. And it's going to take up to 18 months for that to start climbing again, right, Patrick? So it's important for people to realize there's a big lag here in real estate. That's actually a good thing from my perspective. I love that about real estate because that means I can see the market coming, unlike the stock market, where it's a whole lot more whipsaw up and down much faster. It's a much more liquid market.
Well, we have to look at what is this all about. So even when we look at these GDP numbers, what's been driving our GDP, I mean, we talk about it frequently, right? Which is Canada's productivity has been in the tank for the longest time. Manufacturing is way down and continues to be down. We're not exporting. We could be one of the richest countries and we're not. So that is a political kind of view. But aside from that, manufacturing down, productivity down. What's driving our GDP is immigration. And ultimately, we're bringing so many people in that's what's been grinding or giving us the GDP growth, the illusion of strong GDP. The reality of it is, take away that immigration, housing is shut down, manufacturing shuts down, we are low productivity. Arguably, we've been upside down for a number of months. Now, having said all of that, as we start to ramp back up again, the back end lag is going to come through. We've already been seeing unemployment ramp up, but a lot of that unemployment, by the way, is because we've got so much immigration coming in. There's just not enough jobs to accommodate. So these numbers, there's so many little nuances that we can't cover here. And by the way, within the RAIN community, make sure you're coming out to the meetings, because these are some of the nuances we're going to unpack a little bit more to give you some insights. But ultimately, JG, when we look at GDP, this number, this graph is actually going to go into the negative in the coming months, and they'll fake it because of immigration, but ultimately we're really in a recession.
Well, we know GDP per capita, which sorry, not GDP per capita, but real GDP, which takes inflation out of the equation, has actually been negative for quite some time, because most of what's been powering the GDP growth, even though it's negligible at best, has been the inflation has been powering that GDP number. And this chart, which was showing you here, is interesting, because this just goes to your point, Patrick, about Canadian manufacturing and how that production is just down and down and down. And in March of 2024, it has hit essentially a low since a year ago. And this is a big. This has a lot to do with Canada's productivity. So it's very, very interesting to see where this is going to go as interest rates come down. And in terms of manufacturing, though, Patrick, a big part of what has to do with manufacturing is exports. What has a big something big to do with exports is our dollar and the strength of that dollar. And I think interest rates, we know that it can have an impact on that. So without getting into a big macroeconomic conversation, there's a lot of entanglement here, I think is the right word. And it's a big puzzle for people to uncover. There's no doubt about that.
And you can't get too buried in all of it, JG. We say this time and again, we say it every time we get on a show, we're talking about where the opportunities live. And so when we look at the economy, investors need to consider how are they going to execute on and take advantage of the opportunities. It goes back to what we've said before. Stay in the game, stay engaged, keep paying attention to what's going on economically. Now, given that drop, sit down with a mortgage broker, look at the programs, look how it's shifted. CMHC's also had a shift in theirs. One of our trusted partners, Keith Uti, will be talking to him. I'm going to be talking to him later this week, and we're going to actually release what's going on there.
Now, Patrick, this chart, though, is something I'm going to be keeping an eye on to see what this quarter point cut is going to do to this chart. Maybe nothing, but as you can see, the Real Estate Outlook Index, which talks about confidence in the real estate market, it has been on a climb from the lows of 2023 when kind of it was at the worst point, so to speak. I'm curious to see where this goes. Does this go back to the levels of 2022? Time will tell, but this is a chart that tracks exactly that.
Well, isn't this so interesting, right? Consumer confidence remains at all-time lows, but the real estate sentiment remains at that people are still optimistic about Canadian real estate in spite of the interest rates. But I don't know how those two are going to balance themselves out, given consumer confidence is really low. That will and continues to have an impact on the economy because people are not spending money. I can't even stress how much people have pulled back in general, especially in that kind of lower half of the income, that middle income and down. They're just keeping their hands in their pocket, and even some of the wealthiest.
Yeah, 100%. Now, Patrick, I think, by the way, you asked a good question. I think the answer is, the reason the Real Estate Outlook Index confidence is on its way up and the consumer confidence is on its way down is because most of Canadians have the great majority of their wealth in real estate. So they have got to stay optimistic because essentially it's all in there. Like the whole thing is in real estate just about. And as a result, they got to stay optimistic and they really want this to work out for themselves in the longer term. Whereas consumer confidence, I think it's different. This is, like you said, it's where people are, what are they doing with their money? Are they spending? Are they going to restaurants? Are they buying those additional goods? And the answer is absolutely not. Right now, they have totally tightened up, and that's going to work its way through the economy. And all of this takes a lot of time. So let's get to the second question, which is interest rates and housing supply. What is this going to do for housing supply, Patrick, in terms of this quarter rate interest cut? Are we going to see a whole lot more supply come on the market? Is this going to unlock the construction projects that have been paused? What is it going to do to housing supply?
Well, supply will definitely come on, and that is in terms of people selling. We've already seen some of that chart, and we see that spike. That quarter point is not going to change anything for developers and builders. The math still does not pencil. And then on top of that, I don't think we're going to see, many are sitting on the sidelines waiting for real estate to crash, to come way down. I just don't think it's going to happen. I think you'll see some regions where it is off in some property types. You know, you look at what's happening in the Toronto condo market. I mean, that is an absolute poop show. You know, the number of completions coming on, plus the number of people that are getting out of the condo market, trying to get rid of the deals that they've agreed to. I mean, that is an absolute flood of inventory that's coming up. And so that condo market in Toronto is a mess. It's going to be years before that problem gets handled. And so it'll be interesting to see there. Having said that, detached, I don't think you're going to see a big drop in detached. There's just not enough of it to go around.
Interesting, Patrick. I have a very similar opinion as it relates to housing supply. The resale housing supply, we've already seen that that's come up, you know, but it's only one side of the story. The fact is, though, is the resale housing supply isn't enough. We need new housing supply, and a quarter point interest rate will do absolutely zero for this. And the reason is because that's not the problem. That's not the only problem. There are much bigger problems we have to try to, tackle. Like, for example, I love Daniel's tweet here, where he talks about how in 25 years, development charges have gone up 9,000%. Patrick, let me ask you this. If you didn't have a monopoly, you're a business owner, you're a small business owner, just like me. If we weren't the government, we didn't have a monopoly, could we raise our prices 9,000% in 25 years? Like, is that even possible?
It's not even possible. Don't get me going. Don't get me going.
So clearly, politicians are not serious about getting housing built. Development charges, again, going through the roof. Hats off to Doug Ford for what he did with regards to his new bill, because that really helps, because you don't have to pay development charges on that third unit in Ontario. So that's good. But it's more than just that, Patrick. Look at building permits. You can see that we are 168 days slower to issuing, on average, to issuing building permits when we compare ourselves to the United States. It's even much longer if you compare us to like Finland, for example. Point is, it takes a long time in many cities to get building permits. But I will say, Patrick, that this is very municipality based. And most of this number comes from Toronto. So it's a good headline chart, but most of this comes from Toronto. I'm sure Vancouver. I don't know how long Vancouver takes, Patrick. You might know better than I do.
As long or longer
than Toronto. It takes years, like 2-3 years to get a permit, at least a year for sure, to get a permit from Toronto, from the bigger centers. Like in Peterborough, though, Patrick, I submitted for a building permit less than a month ago, and I had a building permit yesterday. So I'm getting building permits in somewhere between 2 to 4 weeks in Peterborough. Same thing in Lindsay, City of Kawartha Lake. Same thing in Orillia. Same thing in Barrie. 2 to 4 weeks is what I'm getting it done. I'm very impressed with the small municipalities. They have really geared up to get permits moving. So that's a good thing.
Well, this goes back to a couple of things that we've talked about in the past. And that is that, the government has this rhetoric that they're going to fix supply, that housing prices are going to come down. And we know that that's just, call it a lie. They could be delusional and actually believe that they're going to pull this off. But when it comes to affordable housing, there's a couple of points. And Trudeau actually said it. Maybe we can find the clip where Trudeau comes out and says that really he said it out loud. We can't afford housing to come off because that would ruin the retirement plans of many. Some version of that statement. Like, he actually said that out loud. So as much as on one side of the equation, they're saying we got to make housing affordable, we got to increase supply, until they start looking after this, none of that is going to happen. And then on the reality of it is politically, if housing prices come down, they're done. They're done anyways. But any politician right now that is really going to force the issues and put in the corrections necessary to bring the cost and potentially bring the cost of real estate down, it's political suicide. They're not going to do it. They need prices to stay where they are.
Yeah, it's a good point, Patrick. So these are all things that impact supply. Quarter rate interest drop, fantastic, doesn't help anything with regards to this. And I think that's just that, and people are going to see that. And there are a lot of people, Patrick, as you mentioned, that are just waiting, saying, oh, the market is going to go even lower. And I'm just thinking, where are you guys? Like, are you guys even looking at the market? Because every single property that I own, Patrick, and that I manage, I get appraisals. I probably get somewhere between 8 to 12 appraisals on a variety of properties every single year. And appraisals are up. In fact, I'm seeing appraisals up, and they're either in the cities I operate in just about every single category. If you're running single family, duplexes, triplexes, small multifamily, your pricing is up. It's not down. Don't believe the headlines. That's what I'm seeing, Patrick. Feet on the street.
100%. And I cannot stress enough is investors, don't let the headlines scare you off. Do the work, lean into this chaos and this confusion, have the conversations with boots on the ground individuals who are actually, like you, JG, as an example, you're in it, you're seeing what's really going on. So talk to your mortgage broker, talk to investor focused realtors, and you start to get a totally different picture. Opportunities are there. And the good news about it is, JG, is that you've got time. You can write offers. You can be creative with your offers. It changes the game because there's a lot of pain out there. A lot of it driven, by the way, by debt service ratios that people are dealing with and that they fear in the near future. So those are opportunities for investors. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.